What is a member's voluntary liquidation? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. A member's voluntary liquidation is a way of closing down a company if you are in a position that you can't use the simplified dissolution process. Check out the video on what the simplified dissolution process is on the channel. That hopefully you may be able to use to keep things as simple as possible. If you can't use that approach, then you will have to use a liquidation approach. And this is if your balance sheet value is over 25,000. And if that's the case, then you can't use just a simple dissolution DSO1 form. You have to go through the liquidation process. However, you're not doing it because the company's gone into default, there's any issues. It's down to the fact that you don't need the company anymore. And the member's voluntary liquidation is where you as the shareholders have said, we don't need the company anymore. We now need to close it down, but we need to do it in a formal approach to ensure we've complied with Companies Act and the company law. So the type of company that tends to use a member's voluntary liquidation is going to be a solvent company where they've got money potentially in the bank. So if we think about our property companies, it may be you're now in a position where you're going, well, actually, I don't need the company. We've been selling off the properties. We don't have any properties. We've now got a very large amount of cash in the bank. We've got two approaches to take where we could be paying dividends each year and using that money for different options for the next couple of years. But actually, we don't want to have to keep preparing company accounts. We don't want to be taking the money out every year to be tax efficient on an annual basis as individuals. We just want to get the company gone and we want to take the money out, and we've got £1 million sitting there and we want to get that out of the company all in one go, and we don't have to want to take 10-20 years to be taking 50,000 out a year to actually get the money out tax effectively. So we're in a position where actually the members' voluntary liquidation is a good and the right option, and probably the cheapest option to get the money out of the company. The decision to liquidate the company is always going to be the directors and the shareholders. So when that decision is made, then it will be a matter of approaching a liquidator to go through the process. But this one is always a voluntary, it's not a required one because your creditors have come and said, we want our money, pay now, we're going to close the company. This is you making that active decision because it's the right time. It should be noted that this is a formal process and there are specific things that a liquidator will do to enable this to happen. Based on it being a liquidation, there is certain tax things that we need to be aware of that we'll cover as we go through the different elements of what the members' voluntary liquidation is. There are several steps to the process, which, as you can see on screen, are a declaration of solvency, and this is the directors who will make a statutory declaration that the company can pay its debts within a specified period of time. We then have a members' resolution, which this is passed by the members to wind up the company, and it's usually 75% agreement of the shareholders. So if you're the only shareholder, it's very straightforward. If there's more than one shareholder, it's just all the shareholders, family members probably, that need to agree, yeah, we're going to close down the company and get the cash out of the business. You will need to then appoint a liquidator who is a licensed insolvency practitioner, and they will then go through the formal process to make sure all of Companies Act is followed. Now, the next part will be asset realisation and distribution, and this is where the liquidator will go and realise any of the company's assets, pay off any debts, and then distribute the remaining amount to the members. Now, company assets, hopefully if you're a property company, you possibly have already gone through the process of selling all the properties and you're just left with a cash balance in the company accounts. So that gives it a really hopefully simple job, and the reason I say that is because the more the liquidator has to do, the more their fees. At present, around when this video is released, you're probably looking at 4,000 or 5,000 for a liquidator to close down a company that is relatively straightforward. As there is more complications, so if they've got to sell properties, pay off mortgages and do all those sorts of things, then the fees will increase to a greater amount. So it's just the simpler it is when it goes into the liquidator's hands, the less the fees, and hopefully the more of the money that you will actually get back yourself. The final then part of the puzzle is that the final accounts and the dissolution will be done. So the liquidator will prepare any final accounts to make sure everything's all as it should be, and then they will apply for the company to be dissolved, and then it will get struck off with Companies House. Now, in terms of tax implications, we are talking about capital gains tax, because you as the shareholders now will have actually received that money from the company as a distribution. Now, as a distribution, this is potentially capital gains tax, and you'll be taxed at the 18 and 24% rate depending on the value. Now, there is something called business asset disposal relief that you should be aware of. However, if we are talking a property investment company, then this will not be available, as the business asset disposal relief is available for trading companies, not available for investment companies. Now, if you are a trading company, so maybe you've got a letting agency that you've closed down and dissolved, or potentially sold, that would fall within the remit of the business asset disposal relief, which would reduce your capital gains tax rate down to, it has been 10%, it's going to 14%, it's going to 18%, depending on the year of the disposal. So that's just something to keep an eye on what the government does in terms of the percentages, but that is the lower rate than the 24% definitively, 18% potentially for the lower rate, and that is on the first £1 million of gains that you are making. So it can be quite useful if you're in a trading business. If it's one of your investment property businesses, you're not going to get this, and it's just going to be at the 18 or 24% tax rates. Now, as we've said, the cost tends to be, I've found, around the 4,000-ish for a very simplified one, or it will increase going greater. And the time frame can very much vary on how long these things are going to take. The reason I say it varies is because if it is very straightforward, you've just got cash in the bank, it probably is going to be a matter of weeks or a couple of months to get all that sorted. And then obviously you're waiting on Companies House to close the company. So maybe a couple of months max. If you've got to sell properties, pay off mortgages, do final accounts, sort things with HM Revenue and Customs, then on that basis it's going to take longer, and it may take several months up to potentially 12-18 months, but it's getting that process started. In any eventuality, I would definitely recommend that you seek advice. Have a word with an insolvency practitioner before you're ready to do things, so that you can see what they need to have happen before they get appointed. Have a word with them as you appoint them, see what is needed, and as well as the fact of talk to your accountant, because they'll probably be able to put you in contact with appropriate persons who will do this process effectively for you. This is a happy end to a business. This is one that has achieved its purpose and got to what it wanted to achieve. So a members voluntary liquidation is not something that is a negative thing. It's actually a really positive thing, because you've gone through your property adventure potentially, you've achieved what you wanted, you've capitalised on everything that you've invested in, and now you're closing it down to get that final cash payout, hopefully to go and enjoy your retirement, or potentially to gift to children or donate to charity, or whatever you want to do with those funds that you're realising. But hopefully this is a positive, it's a kind of a celebration of work well done, of achieving a great thing that your business has done, and moving forward to enjoy the next chapter of your life. Hopefully today you've discovered what a members voluntary liquidation is and when it may be used in your company's journey. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel, and let's make tax less taxing.